Hey, good afternoon, everyone. It's Wednesday. It is about 2 o'clock. Markets are closed. Let's take a quick look at what the market action did here today. Not a whole lot of new news that's out there. We just have selling pressure across the board coming from the moisture that's been accumulating, the prospects of a big safrinha corn crop in South America. You got the big bean crop. You've got the weather that looks good here in the U.S. and a large crop coming our direction as well. So you've got the prospect of higher balance sheets, and that's just got things under pressure. Certainly something that we've been looking at and talking to for quite a while. November beans is what we've got right up in here. Obviously, we're trying to consolidate and put a little pressure on these lows. I would look for these lows to give way and then ultimately come test lower levels. Let's put some perspective on here so we can see exactly what level that is. Let me find the right indicator here. And for our perspectives here, once this level here gives way, we're looking down to 1212 in November, maybe even down to 1190. Really, I don't know if we'll go straight to that level or if we'll bounce just a little bit, but lower is where we're looking. And this count can get pretty exuberant. You know, if we break all this, break 12, we can easily come test the lower 11s on soybeans. I don't think we do that right away, but it's certainly possible. And then we'll have to just be realistic about the fact that if we're going to get a rally, it has to come from a surprise. It has to come from a weather surprise, or it has to come from some sort of a demand surprise there. All right, old crop soybeans, no different. Lower we look. If we put the retracement levels on here, we're looking down to the 1340 to 1306 area. And if we violate those, then obviously these count to even lower. So no reason to change our opinion on here at all. I do think that we're due for a little bit of a dead cat bounce, but then that should be sold once it happens. Okay, now let's look at Kansas City wheat. Kansas City wheat has been an absolute disaster this week, right? This is Monday, and it's just been straight down on the prospects of rain. You've got lots of supply in Russia that is apparently having trouble moving, and you've just got kind of a devaluation going on across the board in all of the ags, right? So no major changes here. If we put a retracement number onto here to look where we may trade to, we're looking at 716, 689, and potentially even down towards the $6 level. The only bright spot on this chart is this red 13 right here, which would typically mean that you might find a little bit of bounce in this area. This is what's called a perfected TD buy setup off of Tom DeMark's sequential indicator. It's a nice setup. It's pretty reliable. But what we found on the move up when we really worked higher over in 2020 and last summer, we kept getting repeat 13s, so they weren't real reliable in that really strong uptrend. But this is what it should look like, right? You get at 13, you get a little bit of a bounce and maybe an opportunity to get things resold. So that's what we're looking for. We'd like to see that happen. If we do, let's look at some Fibonacci retracements here. Let me take this one off. And you can see from this move to today's low, a 38.2% retracement would be back up to 820. And if we were able to get back to 61.8, it'd be 844. I think that's going to be a really tall order because I don't think that we're going to get back up above the $8 level. I think we're going to be stuck below all of this support, right? All of this resistance, because earlier today this was support that was holding, and now this area has given way. So I think we're going to be stuck right here, maybe for a few days, and then lower we go. Now let's look at corn, because I think that's going to help tell us when we should expect something like wheat to roll over or find support. Let's see, why will this not click on my hide notification? Okay, there we go. Okay, here is old crop corn. It looks a lot like old crop soybeans, right? Where we're just on a straight decline. Obviously, we're consolidating right here at the $6 level. I thought it would give way, that 6 would give way right at the close today. It's certainly what it looked like. It didn't. It held it, and you know, maybe it will. But if it doesn't, then I would expect that to break in the night session here, and I would expect it to just roll on over. And if we're going to look for a target as to where we may take this thing down to, you know, we're talking taking old crop corn down levels down to the 560, 570 area, potentially even lower down to the 533. And in new crop corn, everyone hold your breath on this one because this is not a pretty picture at all. New crop corn, if we're going to roll it over, which it certainly looks like we are doing, and this should accelerate lower to the downside, you are looking at a level of a test of the $5 level coming sooner rather than later, before much of a bounce. So our recommendation across the board is stay hedged. We don't have any reason to think that new crop contracts are going to rally. We certainly understand the reasons why they would continue going lower. So our recommendation is stay hedged, and we're not looking for reownership opportunities at the moment. We had some of those the last couple of weeks, but obviously those didn't work out after this big hook reversal day here. And we don't see that on the an opportunity there in the old crop contracts, and we don't see that on the new crop contracts yet, as we speak. So lower we go, and lower we're going to keep looking until the markets give us a reason to look the other way. Hope that's helpful. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. That's all I got for you today. We'll talk to you later on. Have a great night. See ya.